Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, bond curves are steepening again as progress in the fight against inflation shows some promise. American producer prices actually fell in July from June, an unexpected dip. They are now 9.8% higher than the same month a year ago, and that's much less than the 11.3% rise recorded in June. This is more evidence the current inflationary surge has topped out. The July dip to their PPI is their first in more than 2 years. And American petrol prices have fallen again, now below $4 a gallon on a national basis for the first time since March. It follows effective action from their federal administration. And US jobless claims rose to 204,000 last week, and there are still only 1.454 million people on these benefits, unchanged in a week and still near a record low. But note that the seasonally adjusted rise was to 262,000 last week, so other media are reporting this as a 9-month high. In a sign that recession fears may be waning, American high-yield bond funds are attracting heavy investments, a turnaround from the sell-offs in the first half of the year. Investors are essentially betting that the Fed will limit future interest rate hikes to try and avert an economic slowdown. But one prominent Fed voter, Mary Daly, is saying it is too early to declare victory against inflation's pressures. In China, passenger car sales surged 30% in July from a year earlier to 2.42 million units in a month, extending a recovery that began in June with the help of eased COVID curbs and government incentives. Sales of new energy vehicles, which include pure electric vehicles, plug-in hybrids, and hydrogen fuel cell vehicles, accounted for much of the recovery. China's car market is the world's largest. And inflation expectations in Australia are slipping. The respected Melbourne Institute August survey pegs the one-year expectation at 5.9% now, down from 6.3% in July and 6.7% in June, which was a 14-year high. And global container shipping freight rates fell faster last week, down 3% in a week, and the 24th consecutive weekly decrease. These freight rates have now dropped 32% when compared with the same week last year. The rates to and from China falling the fastest. Bulk cargo rates are lowish and stable. Tanker rates, however, are rising. The US Treasury 10-year yield starts today at 2.88% and 10 basis points higher than this time yesterday. And the price of gold will open today at $1,789 an ounce, which is down $7 from this time yesterday. And oil prices are up $2.50 from this time yesterday, just under $94 a barrel in the US, while the international Brent price is just over $99 a barrel. And the Kiwi dollar will open today at 64.3 US cents, which is holding yesterday's jump. Against the Australian dollar, we're holding it higher at 90.5 Australian cents. Against the euro, we're still up to 62.3 euro cents. That all means our trade-weighted index starts today still just on 72.3 and our highest in more than 3 months. A higher exchange rate will help our fight against imported inflation. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by Interest.